Hey guys, what's up? Shane here from AwakeFX. Thanks for clicking on this trading video. Now, I know it's a while since I made a video, so I said today, okay, today's the day. I want to make you a video that will make sense and something that will be quite interesting for you. So this video is about the idea of re-entering trades. So have you ever been in a trade, it starts moving in your favor, and then it comes back and it stops you out. And then after that, you see the same trade go to the target that you thought it was going to go to anyway. And you go, why did I not maybe re-enter that trade? So today I'm going to show you an example of two trades I took on the ES. The first one was a trade I entered and I got stopped out, but then I re-entered the trade. So I'm going to show you the thought process around that, and it'll be quite interesting. It'll show you how I can have a 50% hit rate, one loser, one winner, but be very, very profitable with the trade because I re-entered. So let's have a look at the charts and what we did today. Okay guys, I want to start by showing you the statistics for today first. Okay, so this is my Tradovate platform. You can see my mouse here just above my head. You can see here the total P&L for the day was $1,518 here for the day. Now if you look just below where I am, you can see there's been three entries down here below. These are the three trades I took today. So the first one there, if you look across to the very right hand side, was a profitable trade, was $812.50. That was a 6E futures. So that was a Eurodollar futures trade I took. And then the next one I took after that was the first of my ES trades. So you can see over here, I did lose $50 on the trade. Okay, so it was practically break even, just a $50 loss in that one. But then the next trade I took, I made $800 on that ES trade. So we're going to talk about these two trades, the one that lost $50 and the one that made $800. So let's have a look at the chart. So guys, now we're looking at a 5-minute chart of the ES. So it's in bar replay mode. So I'm going to show you step by step what I saw here this morning. This cream box here represents the time from 9:30 a.m. New York time. That's the US Open up until 11 a.m. So this is a kind of an area, a time of the day I like to trade the ES, okay? So on the left of the chart, I saw this major swing high here. And what I did there was I drew up my buy side liquidity zone above that to begin, okay? So that was prior to the open. I had this marked as my buy side liquidity zone. You see before 9:30, the price did kind of break up above that area, okay? But the trend was not broken. You can see there's a trend going high, low, higher, low, higher, high, and then we're kind of in the middle here. So the trend wasn't yet broken, but the buy side was taken out. Okay, so there was a lot of buy stop orders being absorbed up here. So I was preparing myself for a short trade if I saw the right thing happen after 9:30. Let's see what happened then. So it just moved forward candle by candle here. So price moved down, boom. So that was the first candle, 5-minute candle at 9:30 a.m. And price moved higher obviously here. So I was not interested in buying. I was not interested in selling. I was waiting, just waiting for a trade entry. We did have buy side liquidity taken, as I said, but I want a market structure shift, number one. And I want to see a fair value gap or something along them lines before I would enter a short trade. So what happened next? Price then moved up and broke this high here. I like seeing that. It looks like the uptrend is intact. Then what happened? Now, what kind of candle would you like to call that? That to me is a serious displacement candle, okay? So this is exactly what we want to see when we're looking for a short, with a huge sell candle come in just at 9:40 a.m. there. And once that happened, I was like, okay, I'm preparing for a short if I can get maybe a fair value gap or something in this area here, because the buy side liquidity is taken. And now we have a break in structure, because if we look here, we've had that series of higher highs, higher lows, and then boom. This is the baby that took out all these lows. So now we technically are in a situation where we could have a move like this. Okay. So that's what I was looking for. So let's see then what happened After that, we'll zoom in a little bit closer here. Okay, so this candle formed here. That's a 5-minute chart. So then what I did is I drew up my fair value gap, which is from this candle's low to this candle's high. And I'll just mark that as a fair value gap short. Okay, and literally what I did is I entered a trade just one tick in here. Let me zoom in a bit closer. I entered the trade short just inside this fair value gap here. Let me just mark that up. So I was short. I had a 5-point stop on this. I'm looking to make about 10 points usually on trades once I enter them. 10-point target would be down about here, okay? And I thought, okay, we do have a sell side liquidity zone down here we could mark up. So that was another area where price could gravitate towards on the downside. So I thought price could turn here, move lower. That was the plan. So I entered my short. What happened next? Boom. Okay. I was taken into the trade. I was tagged in. So after this displaced move down, I had my short position there and I just got tagged into the trade. So at that point then I zoomed down to a 1-minute chart. I was watching this in a 1-minute chart and I was short. Okay, so this is a 1-minute chart now that we're looking at. And I'll show you my mistake. Well, it wasn't really a mistake, but you'll see now shortly. So what did I do next? So price moved forward, price moved lower. Happy days, I'm in profit. Great, price moved lower again, in profit again. What I did at this point is I moved my stop loss all the way down above this high. Okay, so I moved my stop just above this high. So literally I had half a point of a stop loss. Okay, so that's why it was practically break even. What happened then? 1 minute later, we kept moving lower. But then we got this little bounce here. And when I saw this bounce, I was thinking, oh no, hold on a minute. This might stop me out. And it started moving up kind of quite aggressively. And I thought, okay, this is going to stop me out here. Because price does like to sometimes come back. Just take out the stop losses above here before moving lower. So what happened then? Boom, price went up and took me out for half of a point of a loss with 2 contracts. So it was $50 loss. So it wasn't anything significant. At this point, I still think the trade was valid. It was just that I moved my stop too early, and this price just went into the fair value gap a little bit more deep. If you pull a Fibonacci from the swing high to the absolute swing low, you can see that price literally came up and tapped exactly just above the 50% retracement as well. And that's where I would usually enter a trade anyway. So what I did then is, as price came back down on the next candle, I went short again. Okay, so I went short again. That was the second trade. And I had my stop loss about 5 points up here. And then I let the trade do its thing. I was looking for this move lower. Price moved lower, price moved lower, price broke this low here. Okay, bounced back up a little bit. But then we moved lower like this. At that point, I brought my stop loss down to break even. And I was just looking to get about 10 pips out of this. Price moved lower, lower, lower. We got down around here and I exited the trade just down here at these lows. So that was the trade. And really the learning in this is the fact that, look, I entered short. Price moved in my favor. I was a little bit too quick to move my stop. So I could have left my stop and then waited a little bit longer. But still, price could have went up and took me out of that first trade as well. So I was managing my risk. So the good thing is I kept my risk tight. I didn't get that first entry to go to target, but I got the second entry to go to target, and it was a really beautiful trade. So I was very happy with that there today. So there is learning in that, guys. I suppose one learning could be that don't move your stop loss too quick. The second learning could be that don't be afraid. You know, if you're in a trade and you move your stop loss and you get stopped out and it still makes sense, which made sense here, this Fibonacci 50% level, them two candles together actually, when you have an open, a move higher and the next candle has an immediate move lower. This here, these two bars combined is like a doji. It's like a candle with a long wick at the top. It's the equivalent. Prices started low, it's moved higher and rejected back down to that low. So these two candles together as well are also gave me further confidence, these two candles, the price would move lower and to do that. So I was happy. I got out here at the lows, and then what happened later, I got out at the right time because that was the low of the day. Okay, so sometimes it's good to not be looking for huge targets. Okay, looking for 15, 20 points. Get 5 to 10 points out of a trade. If price kind of stalls, I'd be looking at these candles on 15-second charts as well and see the activity that's happening down here. So I was happy to get out there. It was a good trade, and that's it. So hope that lesson made a little bit of sense to you there, guys, and gave you a little bit of further insight to how I trade. And hope to see you in the next one. And if you haven't subscribed already, please do so if you're interested in trading, so you don't miss out on future trading videos I have like this for you. So thanks for watching, and bye-bye.